Hello, everyone. Thank you for joining us for today's webinar, which will cover part 2 of our series on foundational property and casualty insurance topics. Joining us today from Propel Insurance and a Lara Group Company are Tricia Hankey, Charnel Devona, Marcy Berger, and Jessica Luck. Welcome, ladies. Tricia, I'll hand things over to you to get us started today.
Thank you. On the next slide, we have what we went over on our previous webinar. And as a refresher, the first part, we went over certificate fundamentals. We discussed what a certificate of liability insurance was, also known as an Accord 25, and why these forms are so important. We focused on the key coverages that are included on the majority of COIs, as well as discussed the value of the COI and the relevant endorsements that should be included. If you'd like to watch part 1 of our webinar series over certificates, we'll include it in our a link to it, the recording in our chat. Next slide. We're going to take a deeper dive now into the risk transfer process and various additional insured endorsements. For today's webinar, we're going to identify the difference between ongoing operations and completed operations. We're going to explore the evolution of the ISO additional insured forms and identify the different coverage triggers. Our last webinar, we touched on the primary and non-contributory and waiver of subrogation endorsements that should be included with the Accord 25. And today we'll discuss the important role these endorsements play in the transfer of risk. We'll help you understand what horizontal risk transfer and vertical risk transfer are, and we'll touch on briefly on other common ISO endorsements that you may see attached to a COI or be requested to provide. Next slide. While this may seem obvious, it's important to know the difference between ongoing operations and completed operations. Ongoing operations covers a contractor's liability for property damage or injuries to a third party, while work is considered in progress. An example of an ongoing operations claim would be an electrician who is hired to replace some indoor lighting in an office. An employee walks by, trips and falls on a toolbox that's left out, injuring their knee, or the electrician drops a light as they're replacing it and it falls on the computers below, damaging them. Both of these examples would be considered ongoing operations as work was in progress at the time of the occurrence. Now, completed operations covers a contractor's liability for property damage or injuries to a third party once the contractor's operations have ceased. It provides legal defense and pays for any settlement or judgment resulting from accidents relating to the completed work. An example of a completed operations claim would be a railing that was recently installed, collapses when a person leans on it and the person falls 10-15 feet below, suffering severe injuries, and seeks compensation from the contractor for those injuries. Because the contractor's work has ceased, this is considered a completed operations claim. Something to keep in mind, completed operations does not cover the contractor's completed work that caused the damages. It only covers the resulting damages and or the injuries sustained from the contractor's completed work. So in my example above, the injuries or the resulting damage that may have happened from the fall, as well as any legal defense, would be covered, but not the work to replace the railing itself. Now I'm going to pass it off to Charnel, who's going to explore the evolution of ISO additional insured forms.
Thanks, Tricia, and good afternoon, everyone. First, I'd like to give you a little bit of background on ISO, otherwise known as Insurance Services Office. It is a company that, among other things, drafts and publishes insurance coverage forms and endorsements and exclusions. In reviewing forms, it's helpful to understand the ISO's numbering system. For instance, CG denotes that it's a commercial general liability type coverage form, while CA, for instance, indicates a commercial auto form. The next 4 digits in their numbering system is the form number itself, with the final 4 digits being the month and year in which it was created or published. So in the example that's here on the slide, CG 2010-04-013 indicates CG, Commercial General Liability Coverage Form, 2010 being the form number, and April of 2013 being the year in which it was published for use. Next slide. ISO has consistently updated their forms. This exhibit captures many of the incarnations of the additional insured forms. We understand this slide might be hard to read, especially if you're doing the seminar on your phone, but rest assured we're going to break it down a little bit in the next few slides. As we discuss the evolution of the additional insured forms, in most cases, newer versions tend to lessen the coverage that's afforded to the additional insured. And that's primarily in response to the court's broad interpretation of coverage. Oftentimes in the older edition forms, additional insureds got much broader coverage than was intended when the insurance carrier added that additional insured. So while earlier editions of the additional insured form benefits the additional insured, the later versions are usually more palatable to the named insured and to its insurance carrier. So let's go into them in a little bit further detail now. Slide. The earliest rendition of the additional insured endorsement after the whole simplified insurance switcheroo, if you will, in 1985 is the 2010-1185. It's a CG 2010-1185, published in 1985, obviously. It offered the broadest coverage available to additional insureds. Given its coverage trigger, which was arising out of, it was even interpreted in some cases to grant coverage for the additional insured for their sole negligence under the named insured's policy. Marcy will touch on the coverage triggers a bit later. This edition, the 1185 version, also included coverage for both ongoing and completed operations. If we fast forward a little bit to 2001, and you'll see those two exhibits on the middle and right-hand side of your screen, the 10-01 forms debuted. The 2010-10-01 included coverage for additional insured for ongoing operations only. Notably missing was the coverage for completed ops. Hence, the 2037 was born to address the need for the completed ops coverage. So instead of having one single form covering both ongoing and completed ops, in 2001, we now have two forms, the 2010 for ongoing and the 2037 for completed. In the 10-01 version, the coverage trigger for the additional insured was still arising out of. So it was still offering very broad coverages for the additional insured. Next slide, please. Skipping through time again, we now come up to, and there's been several versions in between 2001 and 2013, but you'll find that the 2013 and now the 2019 forms are the ones that are most widely used. ISO kind of got smart actually in 2004 and amended our coverage trigger from the arising out of that was so broadly interpreted to caused in whole or in part by. The intent was that the named insured had to have some element of fault before affording coverage to the additional insured. This eliminated the use of the named insured's policy by the additional insured for their sole negligence. The most current editions, 12 and 19, are probably the most readily available in the industry right now. We do find cases where the 07, 04 or the 04, 13 versions are used, but honestly, it's very rare to find a carrier that's willing to add those older forms, the 85 or the 10-01 versions because of the broadened coverage. So in this case, I do caution you, if you're on the receiving end of a contract, be sure to look and see what kind of additional insured forms they are requesting. If they are requesting older versions, such as 1985 or the 2001, then you might want to have a discussion with your insurance broker on how to address those. Marcy, turning it over to you.
Thank you, Charnel. Awesome job. Next up, let's take a look at the two additional insured coverage triggers a little more closely. The major change that you notice between the older form versions, like the 1185 and the 1001, and the newer ones, 2004 and subsequent, is the causation trigger language. The older forms, like Charnel mentioned, contain the verbiage arising out of, which was then changed to caused in whole or in part by in 2004. All ISO forms since then have this more restrictive language. The main intent of insurers is to remove coverage for the additional insured's sole negligence. So what do each of these actually mean? Arising out of. So think of it as linked to or originating from. This verbiage is the broadest coverage that can be granted to an additional insured. And many courts over the years interpret this language so that policies will respond to injury or damages arising solely from the additional insured's negligence, caused in whole or in part. This wording is attempting to establish some sort of liability link in order for coverage to apply. So ISO and many carriers use this more updated verbiage to limit coverage to additional insureds for some sort of contributory negligence. They want to make sure that it's not just solely on the additional insured. So depending on your intent and maybe your position in a contract, you're going to have different goals for your additional insured endorsements. A general contractor on one hand is going to want the broadest coverage that they can get, whereas a subcontractor and their insurer wants to narrow that scope to prevent paying for losses that's not caused by their insured. Let's take a look at a few claims examples to kind of better understand how these different triggers might apply. Please do note, though, that depending on the state you're in, the specific court, outcomes definitely vary. So just keep that in the back of your head. We are not attorneys. So first up, we've got John's Plumbing, who's a subcontractor at a job site. This job site is controlled by the general contractor, Marcy Builders, Inc. As required by contract, John's Plumbing lists Marcy Builders as an additional insured using the CG 2010-0704. This is the form that uses the caused in whole or in part by wording. In the first example, a pipe that John's Plumbing was installing fell off the building and hit a pedestrian. It was determined that John's Plumbing was careless in installing the pipe, but also that Marcy Builders was negligent for failing to protect the pedestrian from falling objects. So in this situation, there's contributory negligence. So Marcy Builders is protected as an additional insured under John's Plumbing's policy. In our second example, we have an employee of a mechanical contractor that's on the job site. They're injured in a fall when Marcy Builders does not properly secure scaffolding. The worker demands the damages from Marcy's Builders, and Marcy Builders seeks additional insured status on John's Plumbing's policy. However, since the injury was not caused in part by John's Plumbing, he had no negligence whatsoever, Marcy Builders will have no coverage and will need to rely on their own policy. In this example, if John's Plumbing had provided an older form version, so say the 1001 or the 1185 with the arising out of verbiage, coverage may possibly have been provided to Marcy Builders. Next slide. Two other common endorsements that may be required or provided to you are primary, non-contributory, and transfer of rights of recovery. So what are these? First one is primary and non-contributory. ISO form number is CG2001. This contractual requirement is used to determine the order in which multiple policies triggered by a loss should respond. So primary designates that a certain policy is going to respond first to a claim, and non-contributory means without contribution from another specific party, which is usually an additional insured or some other upstream party to a contract. Next slide. Transfer of rights of recovery. This is very commonly referred to as waiver of subrogation. And this is ISO form number CG 2404, very common requirement. This endorsement means that the insurance company forfeits their right to sue another insurance company for full or partial payment made on a claim that involves multiple parties. So if we take a look at John's Plumbing and Marcy Builders again, we can kind of see how these forms might apply. So in this situation, say at the job site, they were both working on a building inspector slipped on a wet floor caused by a cracked pipe. So he sues both Marcy Builders and John's Plumbing for his injuries. Who's going to be responsible? Couple questions you'd ask. One is Marcy Builders additional insured on John's Plumbing's policy? If yes, then she'll seek defense on his policy. Second question would be, did John's Plumbing provide Marcy Builders with a primary non-contributory endorsement? If yes, then John's policy is solely responsible, even if his limits are exhausted by the claim. So Marcy's policy is not going to contribute to that. And then the third question would be, was a waiver of subrogation provided in favor of Marcy Builders? If yes, then John's insurance company can't go back and try and recoup some of that payment from Marcy's insurer. Understanding these additional insured forms and how they apply is really important in determining what you yourself will require in your contracts, but also in knowing what you're providing to others. Next up, we have Jessica, who's going to chat a little bit about risk transfer.
Hello. So today we're going to talk about the ladder of risk transfer and how additional insured forms play a part. The basic principle of risk transfer is to shift responsibility of payment for specified losses from one party to another. When you name an entity as an additional insured on your policy, you are giving that entity access to your policy and limits as if they were also an insured. It's a common practice in construction for owners to pass down the financial burden to their general contractor. The general contractor in turn passes down the financial burden to their subcontractors, who then pass down the requirement to any lower tier subs. The easiest way to ensure this is passed down properly is by requesting to be named as an additional insured on each respective policy. If you are a project owner, you would request the general contractor add the owner as an additional insured. If you are a general contractor, you would request your subcontractor add both you and the owner as additional insured, and so forth and so on. This ensures that all parties to a contract are granted proper coverage. Let's move to the next slide. Horizontal versus vertical risk transfer. The additional insured provisions within insurance policies are important tools to manage risk transfer. However, it can be difficult to figure out which carrier is responding when, especially when you have multiple subcontract certificates and additional insured endorsements flying around. Horizontal risk transfer occurs when all of the general liability policy limits available have been exhausted by all parties before any excess or umbrella policy coverage will contribute. Horizontal exhaustion may leave a downstream party exposed to a breach of contract claim by an upstream party if this requirement isn't satisfied properly. If you look at the picture on the left side of the slide, you can see how a claim is first tendered to the subcontractor's general liability policy, then the general contractor's general liability policy, and then the owner's general liability policy before any umbrella or excess policies come into play. This can be quite labor intensive during a claim settlement process. A great solution to this is to alter the direction of risk transfer, also known as vertical risk transfer. Vertical risk transfer or vertical risk exhaustion allows an insured with multiple general liability and umbrella or excess policies covering a single loss to streamline the way the policies respond. Instead of bouncing between sub GC and owner general liability policies, vertical risk transfer creates a clear structure of the order in which policies will respond. We do this by ensuring each contract has a primary non-contributory endorsement on both the general liability and umbrella or excess liability policies, which amends the other insurance costs within the policy forms. If you look at the image on the right side of the slide, you can see the visual of a claim being tendered to the subcontractor's general liability policy first, then the sub's umbrella or excess policy second. Only if the subcontractor's policy limits are exhausted will the claim be tendered upstream to the general contractor under the same process as the sub and then the owner. This should help create a structured risk transfer mechanism. Next, we'll have Tricia review some additional endorsements.
Oh, Tricia, you're on mute.
We even talked about not doing that. Here are a couple other common ISO endorsements that you may see or be required to provide, and a brief explanation of each form. So for the general liability, you see, as Charnel mentioned earlier, we have the CG, and then the form number 2011. This is an additional insured form for managers or lessors of premise. This additional insured form is most often requested by a landlord. It covers the landlord for any property damage or injuries that you, as the named insured, may cause while the premise is leased to you. Next, CG 2012 is the additional insured form for state or government agency or subdivision or political subdivision permits. This additional insured endorsement is often requested by municipalities when a contractor needs to obtain a permit, such as a right-of-way permit or any other permit required for their work. CG 2015, additional insured vendors. Like it states, the AI form is used for vendors and lists the entity whom is selling or distributing your product as an additional insured for the bodily injury or property damage that may arise out of your products. CG 2032, additional insured engineers, architects, or surveyors. This is often required of subcontractors to provide who are not engaged directly with the engineers, architects, or surveyors, but are required contractually by the GC or owner to name the engineer, architect, or surveyor as an additional insured. CG 2034, additional insured lessor of leased equipment. Equipment rental companies often require to be named as an additional insured for the third party bodily injury or property damage that may potentially take place from the use of the equipment leased to you as the named insured. CG 2504, designated locations general aggregate limit. This endorsement applies the separate general aggregate limit to each designated location, much like the CG 2503, this endorsement provides a separate general aggregate limit to each construction project. And then onto auto liability, we see the CA there to note the auto. 0444, waiver of subrogation, like we mentioned, waives the rights of the auto carrier to recover the full or partial amount that they paid on a claim from a negligent third party's insurance carrier if the named insured is required by a written contract to waive that right. CA 2048, designated insured for covered auto liability. Required by contract entities will request to be named insured for vicarious liability under the auto liability policy of a named insured. And lastly, there we got the CA 2070, coverage for certain operations in connection with railroads. Work on or within 50 feet of a railroad is excluded under the business auto coverage form. This endorsement removes that exclusion for a scheduled railroad and job site. It's important to note that this exclusion also applies to the general liability and often umbrella liability, so you will need to obtain the endorsement removing that exclusion from those policies as well. Onto the next slide. And that is it for additional insured and the risk transfer process. Thank you all for joining us, and we hope to see you on our upcoming webinar topics. And to name a few, we got contract review and compliance, cyber, property and real estate, builder's risk policies, and pollution liability, to name a few. And now I believe it's time to open it up for Q&A. So please place any questions you may have in the Q&A.
All right, and while you're doing that, there is one other thing I wanted to add that I think is important, especially since we've been reviewing ISO forms. One thing to note is that your insurance carrier, your own carrier, may or may not actually use ISO forms. They have the ability to adopt the ISO forms, or they have the ability to create their own additional insured or primary or waiver endorsements, following the format of ISO or completely different and doing their own thing. So be aware that your insurance carrier may have different forms. You may not actually see that CG 2010-1185 listed on there. And there again, that's a good time for you to talk to your broker to really understand what your additional insured forms are providing to the additional insureds that you have to have on your policy. So just wanted to make you aware that you may or may not see ISO, but they are the standard and on which that we kind of base our discussions around. So thank you.
Excellent. Thank you, guys. It does like there's a couple questions that came in. Does a second tier sub need to name the GC and owner as additional insureds, or just the subcontractor who hired them?
Would you like me to take this one?
Go for it.
Okay. Ideally, the requirements to list an additional insured gets pushed down to each subsequent sub and sub-tier sub. So in a perfect situation, the sub-tiers contract with the first subcontractor should require them to list both the subcontractor, the GC, and the owner. Further down, subs would have to list the upper tier sub and the sub and the GC and the owner. But the thing to keep in mind with additional insured endorsements is there has to be a contractual obligation. The additional insured endorsements typically will state that so-and-so is an additional insured when contractually required or per written contract or per written agreement. So there has to be a contractual tie. So what we see happens sometimes with subs or sub-tier subs is they say, yeah, we have to have the owner as an additional insured, but if it's not in the contract, that additional insured status doesn't apply. So to answer the question, yes, every sub-tier should have everybody up the ladder as additional insureds written into their contract.
Excellent. Thank you. Marcy, it looks like you had responded to a question. What percent of states have horizontal and what percent have vertical limits? Did you want to touch on that?
Oh, we went back and forth. It's okay. We got that.
Okay. What is the best way to make sure our coverage is appropriate and we have proper endorsements for all our projects and how we do business?
Let's see.
So for me personally, like I feel like a good way is to just reach out to your broker. I know that we provide that service to our clients. One, having them review your contract that you're using with anyone that you hire, but also, you know, if you have a contract that you're about to sign, having your broker review that as well to make sure that you're in compliance. When your agent reviews your contract and what you're asking of others, they can go through, you know, hey, what is the best form to request? How can we make sure that you're properly protected? And then kind of go through those endorsements to make sure you understand what you're looking for. But I know that that's personally what we like to do with our clients to make sure that they are protecting themselves. Anyone else have anything to add? Hopefully I answered that.
That's great. Thank you. Here's another one that just came in. Does an auto policy need to have the CA 0444 waiver of subrogation endorsement, or does it depend on our contract requirements to the subs?
I can address that one. Basically, again, like the additional insured endorsements, the waiver is initiated based on the contractual requirement. So generally, we don't see the waiver of subrogation added to a policy unless it's contractually required. Some carriers will add it on a blanket basis and just essentially say that it applies anytime you're contractually required to provide the waiver. So yes, again, it goes back to the contract. Is it required? Is it not? Hopefully that answers the anonymous attendees question.
Great, thank you. I don't see anything else coming in at this time, so I think we can probably just go ahead and give everyone some time on their day back. You guys, thank you so much for
Really,
being here.
sorry, Caroline, really quick.
Oh, sure.
Someone did ask if the webinars are monthly or quarterly.
Oh.
Our original intent was to do them quarterly. I think this one was 2 months apart, but that was primarily because the two topics went really hand in hand together. The first was, what is a certificate? So we wanted it to be pretty fresh on people's minds to follow up with the additional insured endorsements. But I could see us likely probably going back to quarterly for the upcoming topics. It kind of just a matter of when people are available and you know, especially with summer vacations and whatnot, trying to time those. But our goal is to do them at least quarterly.
Thank you. I completely missed that question. Thank you for spotting that and answering that for me. Also, these are going to be posted. This has been recorded, so we will send out a follow-up email to everybody who registered for today with all of the resources provided. So be on the lookout for that. And I think that's all the questions that we have so far. Thank you. Thank you, ladies, for being here today and for providing all of this expertise. We really appreciate it. And thank you all for joining us today. We're really glad that you took time out of your busy schedules to be here. So thank you. Have a great day, everyone, and enjoy the rest of your week and have a great weekend.
Okay, have a good afternoon.
Thank you.
Thank you.